Good day, friends. We are right now discussing the how to analyze the auditor's report. Please watch my earlier video where I have discussed in detail the structure of auditor's report and its importance in assessing the quality of the management. So without seeing the previous video, this video you will not be able to understand much. So coming to the prompts, so I'll be using this prompt for analyzing the auditor's report. So a general summary will not be helping because auditor's report is more of a with the technical jargons. So I am structuring this prompt so that anyone without even accounting background will be able to understand. So here I'm telling that summarize the auditor report in simple and structured manner, making it easy for a long-term investor to understand. I'm telling to avoid technical jargons and give it in a common language, everyday conversation. I'm telling cover these 5 areas. One, what was the auditor's opinion about this statement, whether he has given a clean chit or has he expressed some doubts? And what is the reason for such an opinion? On what basis the auditor has reached such a conclusion? And what are the different issues that auditor has raised during the audit of the financial statements? And uncertainty, what is expected in future? So the material uncertainty and going forward concern, like a risk of bankruptcy, whether it cannot raise money or it cannot be able to pay salaries or pay for its vendors, etc. Those things are covered in going concern heading. And finally, what it is there in store for a long-term investor based on the auditor's report. So this prompt, I have taken two wide extreme examples. One where auditor has given a negative opinion, another where auditor has given a positive opinion. I have to take this extreme so for explaining how the model behaves. Maybe it's a handpicked cases, no doubt, but such a comparison is essential on this kind of academic videos where we are trying to show the differences. The same prompts when you run in your company, you'll be able to get the proper or specific inferences. So in this, the first one is where the auditor has expressed negative opinion. This is the summary it has given. We'll compare that now. And next one is the positive opinion, or where they are not expressed a negative opinion. So this is the report which I have run the prompt. I'm not running the prompt now because I have copied and pasted in a Word file. I want to show you the difference or how to infer that. So these two examples, now I have put it in a Word file, and let us now review it in sequentially. The first one is a negative concern by the auditor. Okay. So very clearly it says that we have issued an adverse opinion, means a negative opinion, and they feel that the financial statements do not express a true and fair view of the company's statement. And they later say it's a red flag for investors. So why they gave such a adverse opinion? So there are a couple of loans which they cannot recover back, or it is doubtful for recovery. And there are uncertain advances, like 150 crores is given to another company, but there is no evidence how the other company is going to return it back. So it is pinpointing a few cases which the auditor has raised. Unclear financial records. Then potential related party transactions. This is the biggest culprit and a golden test for your management quality. Usually, what to say, non-quality promoters or chore promoters pilferage the company's money through related party transactions, where the company, one of your company, the listed company, money is channelized towards the related party through loans or the entity held by the related party. That's a separate topic altogether. We can discuss in a separate video if required. If you are interested, I can have a separate video, but in this, I need to cut short. I cannot discuss in detail about related party transactions. Here, the inferences, the company has given a lot of loan to group companies, and it is unclear whether they qualify as related party under accounting standards. So these are the 5 reasons why they have expressed adverse or negative opinion of the financial statements. So what were the issues they have raised? What were the issues they have raised during the audit? So that's all updated here. Like some of the this must be balance sheet issues where the estate and properties are shown as overvalued as huge assets. So these are the key issues they have raised. Then going concern, what can happen in future? It has a huge liability of 2,400 crores. Many loans given to other companies have not come back, and the company itself is not able to repay its own debts. See, the structure, when you see both these lines, what you understand is the company itself is borrowing a lot of money, and then why should it give it to another company as a loan? They are borrowing, they have financial stress, they are borrowing it for their daily operations, fine, and that they are giving as a loan to other related party transactions. So they are borrowing and they are giving it to other related party transactions, and they are not leaving any money for the shareholders. Okay, so undo. Then how it reflects on long-term investors? It says the company is struggling to repay loans and it may default. Okay, there are serious governance issues, poor financial controls, all that is coming out very properly, and uncertain future. It heavily depends upon how it's going to handle its debt. So it is telling investors should be extremely cautious and risk to financial stability. Now you tell me, do you want to even analyze this company further? The author himself has very clearly given so much negative chits or flags. Just your time and money has better value. Just skip this and go to the next company. See, very conclusion, the report paints a negative picture of the company. So if I'm picking up a new company for analysis, the first thing always what I do is pick up the auditor's report, read it for a 30 minutes or 40 minutes, and then see what are the inferences. Now with GenA, I'll be able to have a very crisp summary of 1 or 2 pages. Within 10-15 minutes, I'll be able to decide whether should I go forward further or not. So let us now go to the positive example. So the company has given a clean opinion. The auditor has given a clean opinion and says that the financial statements give a true and fair view. This is something positive for the investors. Basis for opinion, the audit was done as per standard practices. The company financial statements is abiding by the Indian accounting law. There is accuracy of financial records, etc. Key audit issues. Though everything is clean, the auditors have raised some issues and the company has answered back, like revenue recognition, royalty payments. There's capital work in progress. So there is some misreporting of assets. There might closure obligations. So they may have to close some mines. Then contingent liabilities. So these are the liabilities which they may have to pay in future if they lose a legal battle. Around 1,600 rupees for some potential compensation pending judicial verdict. Then they have to give another 640 crores out to some another company called as Karnataka Vijayanagara Steel Limited. Then they have some dues from NMDC Steel. So those kind of pending amount is also highlighted. Why it matters? They have significant financial implications. So what about future? There is no immediate risk. There is no concern about continuation of operations, but they are telling you must monitor the legal disputes. I know about this company, it's NMDC. Even if all they end up paying for all these disputes, they are financially, their balance sheet is strong enough to proceed without any concerns. Then implications for a long-term investor. So what are the positive signs? Areas to watch. Yes, they are going to close a mine, legal disputes, etc. Conclusion, financials are in good shape pending whatever the legal disputes. So friends, we saw two examples. So going forward, please do use this prompt to analyze the management quality from a person who has audited the company. People say, oh, it's very difficult to analyze management quality. No, it's very easy. You only need to have the required skill, knowledge and time to dig and find out the truth and quality of the management. So with the next topic, I'll meet you in the next video. Bye till then.